looks like everything works. So here we are, 4-hour chart on the S&P or the MES. But actually, before we do this, Tony, I think you had that question, right, about changing strategies and the challenges that go with it. Is that right? Yes, I remember that. All right, that's a good one. That's a very good one. So let's get through that. Good thing you're in here. We can talk about it. So it's tricky because, well, let's put it this way. If you're trading a certain way and then you're going to switch strategies, there's got to be a purpose behind it. There's going to be a reason why you're switching. So it's usually you're not getting the kinds of results you want, or you are getting results and then you've bumped into limits with the strategy. You can't improve your results just using the same strategy. It's either one of those usually. If you're logical, it's either one of those. The other reason for changing strategies is, well, you're just in a losing streak and emotionally you can't handle it. So now you're just jumping around changing strategies, which is, again, irrational. And that's unfortunately what most of the trading world does. Most of it's shiny new objects, online courses, all that stuff. You guys know about that. So, but anyways, let's consider that we're rational people here, right? Rational traders, and we want to change. If you've got something that, for whatever reason, you're changing, but your strategy that you're using, you are comfortable with it. It's a bit of a comfort zone. You understand it. You've been using it for a while. It's almost instinctive. You almost know the setup as it's happening before it completes itself. You know it. You can anticipate it because you've seen it 1,000 times. You've executed upon it 1,000 times. So, that's a comfort zone. It's kind of like you just show up and let your instincts take over and you're trading, right? That's a strategy that you're using. But now to go out of that, to change that, now what you got to do is go out of your comfort zone. You're building something else completely different. You're trying to look at different indicators, different instruments, different time frames, whatever, right? So now you're no longer comfortable. Now you actually have to step up mentally, consciously, and pay attention. Is it really shaping up as I defined it in my strategy? That volume profile, that candlestick pattern, that average, whatever. So it is challenging. Because just like anything in this world, the moment you step out of your comfort zone, right, it's not comfortable. It means you don't want to be there. You want to solve that problem right away. You want to alleviate that discomfort right away. So you either move back into your comfort zone or you just get comfortable with what it is, as in you work on it, you work on it, you work on it to the point where you've refined it, and now it can also become instinct, right? And this is tough stuff. This is beyond learning how to trade. That's the beginning. That's the first 1 year, 2 years, even 3 years. But once you've been around a while, you've been trading a while, and you're trying to grow your trading, this is the next step of the difficulties that you come across, the challenges that you come across. And these are good things. So again, just like anything that you're trying to learn or trying to do something new, it's never going to be easy the first time. The first time you pick up a golf club, I mean, you can barely even hit the ball, right? But you do it 5 hours a day for the next 6 months, well, you're hitting it pretty well by that point without too much effort, right? You don't have to think so much. It's muscle memory and instinct and all that. So that's the real challenge in unknown territories. There you go, Tony. It's just as you were saying, it is challenging. It's actually a good point you brought this up now, because as you've seen now in the last, call it 6 months, that's exactly what I've been doing. I've moved away from all the options trading that you guys saw me do over the years. And I'm building out something completely new here, which is a totally different instrument, totally different time frame, totally different way of thinking, totally different pace of thinking, pace of trading. And to bring in a bit more detail, it's, the technical side of things generally is not so difficult. Candlestick patterns are the same across all instruments, put it that way. There's not much really on the technical side. Those are the easy things. You're a little bit uncomfortable when you're looking at some new technical stuff, but really, most of us in here are intelligent enough to figure that out quickly. It's the psychology that's challenging. It's, when you're trading and you're familiar with hitting your targets within 5 or 10 minutes, now you're holding for 8 hours before it gets to your target. That's a psychological challenge. That's not a technical challenge. And there's a reason why you're doing it. You're trying to improve your trading, go bigger, all that stuff, right? So again, when you're pushing your trading, when you're trying to improve, you're trying to create a new style of trading, it's 90% of the challenge is psychology. It's all psychology. It's a very little bit to do with technical stuff, maybe a new platform, new instrument, but that's not difficult. So now the few things you got to think about here is when you are doing this, when you're out of your comfort zone, you're trying something new, you're figuring out something new, you're building something new, you got to go small. You got to slow way, way, way down. go into the simulator, trade much smaller sizes, those sorts of things. Again, I'm the living example of that. This time last year, I was trading where it was $100,000, $200,000 trades every day, and that was with the options things. And now I'm trading, maybe averaging about $5,000 a day. It's so small. It's a tiny thing, but there's a reason for it. It's because I'm building out something much, much, much bigger than what I was doing there. Once I get this really nailed in and refined, then I'll scale it back up to the regular sizing. No big deal. And that can take a year. It doesn't matter. Not a big deal. So you got to think of those things. You don't want to put on the risk, as in risk per trade, until you've got the process well refined and you've earned your own trust in being able to execute this process. Then, man, the sky's the limit. It's amazing. And really, it's a good thing. I think every few years, typically, if you're a real trader, a real serious trader, a good one, and sustainable and here for the long term, every few years, you're gonna need to evolve your trading style, because you as a person have evolved, right? You've got more experience in life and in trading. You're thinking differently, you're growing, all that stuff, phases of life, right? Your trading should be a reflection of your personality. So if you believe in that, then naturally your trading should grow as you grow, which means every once in a while, you're going to take a big step back, reevaluate everything, and figure out if what you're doing is still meeting your goals or is aligned with you or not. And then if it's not, then of course you got to build out or work on building something new, something bigger, better, that helps you achieve the results that you deserve to achieve. So, a lot of people don't grow their trading. They just kind of stagnate over the years. And in the end, you find their results stagnate. They're less efficient. They may have built capital, but they're not making more money based on the new capital they've acquired. Mostly they just end up setting fraudulent courses on the internet. They haven't grown their trading at all. Those aren't real traders. Those are internet marketers. Very big difference, right? You guys know all this, so you don't need me to tell you. So it is challenging. It is challenging. It's one of the bigger challenges is that in my experience that I've faced over the years in trading. And I've been trading now, been involved with the financial markets since 2017, coming up on 10 years now. And I've traded all kinds of things. Started out with the crypto world and had my time with day trading, had my time with options day trading. Now moving into the futures market, all these sorts of things. It's just evolution. And evolution is painful. Kill one thing to build another thing. It's never easy. That's a good one. What do you say, Tony? How much change is too much change? Full transition, what you did last couple of years and months. Yeah. Big step back and redo the recipe, important changes slowly. It's a tricky question, background. Yeah, time frame removing. Yeah, so that's interesting. See, there's one thing is, there's two different things. One thing is completely stopping what you're doing and building something completely new. Another thing is just tweaking what you're doing. Two different things, right? So you got to be careful what you're doing here. You got to identify it. Now, if you're just tweaking, that's okay. You don't have to really, put it this way, it's not too complicated. You're adding something or removing something or just making a minor change in the way you conduct your trading. That's not as dramatic or as doesn't take as long as completely stopping what you're doing and building out something completely new, right? That'll take a lot more time and effort and patience, right? And as far as how much time, everyone's different, right? I mean, some people, if they can't figure it out in 2 weeks, they get frustrated. Some people take 5 years to figure it out, and no big deal. Everyone's different, right? So again, you got to evaluate yourself and how you want to do things. And even that changes. Again, I can give you my examples. When I first got into day trading in 2019, I would try some strategy and style, and it didn't work. In a month, I would go and jump into the next thing. And it's not that the strategy didn't work. It's just that I didn't refine it enough or give it enough time or take enough real solid trades on it to see if it actually works or not. Looking back on it now, that's what it really was. I was jumping around every month on something new, right? But that was then. And now, here we are in 2026. And what I've stopped doing with the option stuff has been 6 months, probably more now, probably 8 months. I don't even know. It's been a while. And I've slowly stopped doing that. I did trade options. I slowed down the sizing and realized that's not going anywhere. Forget about it. I don't want to trade that market anyways. There's not enough liquidity, all those problems that I ran into. And so now it's been this amount of time. It's been half a year or more. I've been building out this futures trading style. And you've seen me in the last few months being in the sim and now going live, very small size. But just refining it, tweaking it, getting it to where I want it, where I can trust the results and trust myself to be able to execute this style of trading. So you can see how the personality has shifted compared to 6, 7 years ago. Every month I'd be frustrated and jump into something else. But now it's like, if it takes me 2 years to build out something that pays out $500,000 a day, okay, man, I'll take 2 years to do it. Doesn't matter. You're thinking much, much, much bigger. Again, this is just the evolution of life, really. You live and you grow, you learn, become more mature, all those things. So take your time with it, is my opinion. As in, if I take your time, what's most important is firstly identify, why are you building something new? Why are you changing your style? Is there a good reason? Comes down to motivation, really. But what is the reason? Why are you changing? Is it that you have maximized the results you can get with what you're doing, and in order for your trading to grow, you need to trade completely differently in different markets? If that's the case, okay, but at least you identify that. That's exactly my situation right now. Has been for the last 10 months, 8 months. But for other people, it could be something else. It's something that they've genuinely tried a certain way, and the results are not satisfactory, either losing money or breaking even. And something completely unsatisfactory, based on proper data and proper giving it a go. And then, if that's the motivation, fine. Either way, you have your why, right? Then you go and build up. If you have your why, what will happen is you'll end up being more patient. Generally, you put the effort in through all the tricky stuff that you got to navigate when you're building out a whole new style. And again, there is no wrong style. There's different styles of trading that suit different people, based on your personality, based on your life circumstances, based on the pace at which you function mentally, emotionally, so many things, right? So again, I always like to think, take it slow. Most people don't, especially these days with attention disorders. Goldfish have more attention than most people here. Social media has just destroyed this whole generation. So try and zoom out, think bigger. I mean, that's always what I like to do. Think much bigger. Firstly, figure out your why. Why are you doing this? What are you changing your style for? Right? And that'll give you the drive that you need to push through all the tricky things, to go and learn about a whole new market, go learn about a whole new instrument, whole new platform. I mean, trade with a whole different group of people, even. That's probably the most significant thing, right? And then even trade in different time frames, which emotionally is difficult, is to have that level of patience where you're changing from 5-minute trades to 8-hour trades. It's totally different. Personally, that's been my biggest challenge in the last 6 months or so. So yeah, all those things come into the picture. But I think it's more important than anything else. You don't want to just go running around changing your style because you saw someone showed some viral picture or video on social media saying, look, I made a lot of money on this day, on this trade, when this market went up, and all that exciting stuff. All these social media guys, they know how to get you excited. Put the shiny object in front of you, and then you go chase it. But that's not your why you are learning to trade or learning a new style of trading. Your real why is something else, completely something else. That's what we just discussed, right? That is, you want to change your trading style. Why? Because, well, you're not getting the right results, or you've maxed out the results you can get with that style. Now you've got to build something more. It should have nothing to do with the shiny objects on social media. That's the real problem. But anyways, most of you in here know this stuff. You don't need to tell you more about social media, all the garbage out there in this industry. Truthfully, think deeper about this stuff. This is important. And again, you've seen me change things, so many things over the years. I've done all the tweaks, gone through phases when I went from using moving averages and volume and all that, and tweaking one by one, removing those things off the charts. And that was just tweaking. That wasn't truly building a new style of trading. So that was pretty simple. I find that for 2 months, I wasn't using this indicator. So I removed it off my charts and continued trading, and I didn't miss it. Okay, that's how the tweak's done. It was just like that. But then when it comes to something different, like now, where I've decided I've completely stopped the options trading thing because I've maxed out that market, I need to build up something that's much bigger with much bigger potential. So now I'm building out this whole new style, which is the futures trading thing that you've seen me do, which is not even day trading. It's much bigger, totally different. So hope that helps, Tony. What else we got here? You're not satisfied with the results after doing the same thing for 12 months, not being able to improve it to get out of the break-even zone last one. Okay, good amount of data. You trade futures, don't want to change the instruments, neither the platform to change the people around me. Yeah. I want to simplify trading, make more sense of the moves. Yeah. So there's a couple of really good things here. Firstly, you are breaking even. That's good. You're not losing. That's already, you're better than 90% of the people who attempt trading. You're already getting better results. So that's good. The most important thing, you've already mentioned it here. It's about the people, the company you keep more than it is about the trading. So that's good. Change that. You're in here. We got a lot of smart traders in here. That's good. So you don't want to change the instrument or the platform. Now, that is a self-imposed restriction. I don't think you should impose those restrictions on yourself. And you should be flexible. You should, if you need to change the platform to improve your results, then if that's what you got to do, then do it. I mean, I had the same problem. Like I said, I didn't want to shift out of options because I was making tremendous amount of money out of options. I was like, why would I be bothered? But really, after I cut off from it and decided I'm going to put that in my past so I can actually focus on something even bigger. Oof, that was hard. But the results are tremendous. So don't put those restrictions on yourself, I think. If you need to change from futures to something else, or change the platform you use, or put on pink candlesticks instead of red, if that helps you trade better, fine, do it. Doesn't matter. That's fine. These restrictions are not gonna. I don't think they're gonna serve you. Same, Brian. Seems a lot of folks are changing scenery these days. Yeah, that's right, Brian. Yeah. Well, once you realize where the filth is, you don't want to be amongst filth, right? It's as simple as that. Be amongst real people who are actually trading, not just making money off of selling you courses and rubbish. I mean, I can't tell you enough about this, man. It's like 95% of this industry is all that. There are very few real traders out there. Very few. Don't even get me started on RVR. I think we'll get into that next, how they really trade. I mean, you are satisfied with the platform and the instruments. You think you're good with that? What do you say here? You think you're good now? Okay. Yeah. So if you want to make sense of the moves in the market, like you were just mentioning here, how did you say it? Let me see here. You want to simplify your trading and make more sense of the moves with the system you're doing. You know what? Here's a fun one. Think of it this way. When it comes to the financial markets, Tony, there are no facts. Okay? Think of it this way. Everything's made up. It's all a bunch of crap. There are no facts. So what that now allows you to do is it allows you to believe whatever the hell you want to believe. Create your own little universe in your head, right? Really, go create it. I'll give you my example. What I believe, and there's no factual evidence behind this or any sort of research that I've come across or anything like that, but I choose to believe. That's just my choice. I choose to believe that the market only does two things. It either goes sideways or it goes directional, right? And it flip-flops between them. After it's sideways, then it breaks out, retests, and it goes. So it's either consolidating or it's trending. And the trends happen after a breakout from the consolidation, after the retest of that breakout. That's the retest is when the trend begins. This is what I've chosen to believe after the years and years of reading all these rubbish books and being in all these rubbish trading communities and watching all the rubbish videos on YouTube and just everything, and trading millions of dollars back and forth of my own money, not some prop firm nonsense, my own money. After doing all this over the years, I realized there are no facts. And you know what? I just choose to believe there's only two things. Again, this is just a simple choice. It's not backed up by anything except my own experience, right? So now that I believe this, now I can make sense of the moves in the market, right? I mean, look at the chart I've got up here. Look what I've identified here. Nothing more than here, consolidation, then it breaks and it goes. Consolidation, then it's directional. Consolidation, then it's directional. Where are we now? What phase do you think we are in right now in this little purple square or purple rectangle? Consolidation, right? That's it. There's not much to this. This is it. That's all there is. This makes sense to me. This is how I make sense of it, right? Now, there's other people who will tell you all kinds of things, and they're not wrong either. They'll tell you that they got to have this kind of volume and this kind of sweeping the range and this kind of liquidity grab and this kind of heat map, book map, whatever complicated nonsense. And that's how the market works. They'll tell you that. when they tell me this, I say, okay, thank you for your time. Let's go grab a beer now. That's it. I'm not gonna sit here and debate it. Fuck it. Wasting my time. You know. So again, you gotta choose what you believe. And by choose, I mean you gotta choose. Don't let anyone tell you. Don't let again that another dumbass guru on YouTube tell you. You gotta choose. And you've been around long enough. You've seen the markets. We keep looking at it together every day, right? Shit, you look at this thing for a month every day and you'll already start believing certain things. And you gotta choose that. Make sure you choose it. That is more important than anything else. Don't let someone ever tell you, oh, it's above the VWAP, go long. You know how many people lose money doing that? You got to decide if that's the truth or not. Truly. Right. So this is very, very important because you truly are building out your trading style, or you're stepping away from one trading style and trying to build out a new one. And just to recap, really, you got to have a why. Why are you doing this? Why are you stepping out of your comfort zone? Give me a good damn reason. If you don't have a good reason, then stay in your comfort zone. What are you doing? Yeah. Don't step out. Mostly, you'll find a good why. You have a good one here. You're saying you're breaking even. You're not making money. Okay, that's a good reason. Now you're driven. You're driven to go build it out. Now figure out, what do you believe about the market? How does it work? How do these price action, how does it move? Some people believe you must trade only within a consolidation, like right where the price is right now. You're zooming to this. They'll tell you, okay, there's a high and there's a low. This is well defined, and you must trade inside of this long and short. This is always support, and this is always resistance. Someone tells me that, I'll tell them, okay, thank you for sharing. Now let's go do something else. And that's it. I'm not going to sit and debate it, because you know what? It makes sense. It makes sense to that guy who wants to trade that way, because that person believes that it must be well-defined, range-bound. If it's not in that range and it's going up, it's going down, it's going somewhere else, I don't know where it's going, this guy can't figure it out. Okay, fine. Don't have to figure it out. This guy likes to trade the range. Fine, trade the range. If that makes sense to you, if you believe that. Personally, I don't believe it. I like to think of room to the left. I want room to the left, the thing tends to run. Like right here, look at these big candles. And these are 4-hour candles, man. It took 8 hours to make this one move. Actually, there's 3 of them. It's 12 hours there. So, you know, it really comes down to put it really in simple language, stop being a sucker for everything out there and start with independent thinking. Start with questioning your own belief system of how you believe the market works. What makes the price move? Why does it move? When does it move? Do your own research. For me, doing research is nothing more than looking at screenshots of old price action, or just zooming back on this chart and looking at it. And my belief system is pretty well reinforced. So it's a very, very good point. But this is a very introspective, internal kind of journey we must all go on as traders, especially if we want to survive in this game for a long time. And like I said earlier at the very beginning, every few years, if you're a real trader, if you're a good trader, if you really are trading and not just selling courses and shit, if you really are trading, you're going to go through this every few years. And it's healthy to go through this every few years. We really need to step back and see if you still believe in what you're doing, if it's still giving you the results that you want. Maybe it is giving you the results that you wanted 3 years ago, 2 years ago. Is it still giving you the results that you want now? And what are the results you're looking for now? You know, answer all those questions, and you'll end up at your answer, whether you should continue doing what you're doing, or is it time to take a big step back and revamp everything, turn it all upside down and figure it out. Again, you've seen me do that. I'm in that kind of phase right now myself, with going away from options and into futures. So it's all very, very good stuff, important stuff. Yeah, there you go, Tony. Whatever makes sense to the person. Cool. Let me know if you have any more questions on that. That's a very, very good one. Something we have not talked enough about recently. Thanks for bringing that up, Tony. That's a good one. I think a lot of people need that. Sure, you're welcome. Anytime. Cool. Fun. Well, we know we're trading. I always say this: the 80-20 of trading, right? The real, my belief is 80-20. In the real way to make money, the license to print money comes from keeping your winners bigger than your losers, and that's RVR. Whatever trading style I'm building out, I'm always putting RVR at the centerpiece of it. So when I lose $1, that's $1 lost on one trade, but the winners are $5 or $10 or something big, something massive. Right? You've got to ingrain RVR in your trading. And again, don't be fooled by people on the internet, again, showing you that they've made 5R trades or 10R trades, and they showed their screenshot, and what do you notice? They got in, and they say the stop was here. And then as the price went in their favor, they're just hitting the partial button. They're diluting their position. And the last little partial happened to be at the 5-hour point or so. And then they're telling you, hey, look, I realized 5-hour. I mean, come on, how stupid do you have to be to believe that? And how stupid do these dumbass influencers think people really are? Don't believe that. We've seen this a lot. We've all seen this a lot. That's not RVR. That's just diluting your position. That's called momentum trading, scalping. That's something different. And in that, it's hard to get 2-to-1. Very hard. If you're good at it, you get 2-to-1. Real RVR, you know how it is, right? You put on the trade, you put on the stop, and you have a major target 5-hour away, 10-hour away, whatever your target is. If it goes to that target, great. Now you have actually realized 10-hour. You did not dilute your position. That's precisely what I'm doing nowadays. And it's great when you're not trading 0DT options, you don't have to dilute your position. When you're trading futures, it really allows you to hold that whole thing. That's real trading. And that's real RVR stuff. And that's how you really make money. And you don't need a $10 million account to make $10,000 a day. You guys have seen me make multiple 6 figures a day, every day, consistently. And I never, ever used an account bigger than $500,000. I always kept it at a maximum of $500,000. So when the account got bigger, I just take the cash out, go invest it somewhere else. You don't need it. You just don't need it. It's unbelievable, all these belief systems. But now we have the new rule, right? The PDT rule change. Oh, we'll get into that in a minute. I have opinions on that too. But anyways, there you go. That's that trading stuff. There you go, Tony. Yeah, at the end, it's only 1.5R. It's amazing. I mean, really, all these headlines, all these catchy, what do you call it? Catchy descriptions on screenshots and videos on YouTube, man. Just seriously. Again, I'm lucky enough to have insight to be on both sides of this industry. So once you realize the filth, and you realize if you decide if you want to participate in the filth or not, it's your choice. Me, I don't like to. I'm happy being here. This is great. Anyways, let's look at some real-time price action. And then if you want to talk about anything else, let me know. I'm still here for another 30 minutes before I got to go take my kids to their martial arts class. So very simple. My belief system is here. The price action goes sideways, then it goes directional. So right here, you can see all I've done is put these rectangular boxes on. It's just easier than putting horizontal lines. I identified a consolidation area here. There happened to be a breakout there. Next one I identified was here. Breakout happened there. I think I took this one. I think so. And the target was probably up here somewhere. I know it more. This was a couple days ago. This was yesterday. Consolidation, and it went. I wasn't a part of this. I don't think I was watching it at the time. Right now we are here in this consolidation zone. And let's see what happens. But so let me show you what I look at. And I think I saw it more on the oil market, more in the last few days than anything else. And this has been very interesting. All right, so with the news, ceasefire, whatever, all that stuff. So I identified this consolidation, this bigger rectangle here, basically this area, I identified that. And then I've got the smaller rectangle in here, right? This is interesting. So I'm going to zoom into this area here. Make the screen bigger. What I found here, I did not trade this one, but I was really looking at this earlier this week. I'm like, hold on a second. There is something going on here. There's a lot happening I can look at. So once you have identified the top and bottom of this consolidation, then I'm going to this 100 tick chart. Let's open this up. Zoom way back to that consolidation. That was way up here. There you go. So the bigger one, the bigger rectangle, is the 4-hour consolidation chart. And then I identified this piece of price action. So again, zoom it in further. Right about here, something like this. This piece of price action within the consolidation. So I'm identifying the consolidation within a consolidation. To me, this is a descending wedge. The bottom is identified right there because it was a real big V reversal. So I put the line right down there, and I'm noticing lower highs. So I'm seeing a descending wedge. And sure enough, from there, the breakout happened beautifully. Then the retest happened a few hours later, and then you're in this move going all the way short. So if you're just looking at the 4-hour consolidation, you would think about this area down here. This is the support, which is fair enough. And that's the resistance up there, and then you're waiting for that breakout. In this case, if you traded the breakout, you probably wouldn't stop that twice, maybe catch it on the 3rd, 4th attempt over here as it goes. But what I'm noticing here is there's potentially a way to think about things as a consolidation within a consolidation. That's another way of saying fractal pattern, another fractal pattern idea. So the fractal patterns I've always used over the years is you find a level. Let's say you have a level up here, and you identify this as resistance. Anytime the price gets up here, you're looking for a short. You're waiting for a setup for a short. If the short setup comes out, then you take it and you go short. That's the fractal pattern. The idea, the way I've used fractal patterns so far. But I'm just applying the same thinking to the consolidation concept. Consolidation is the price goes sideways. So if it's consolidating on a bigger time frame, I'm using a 4-hour chart here, then I'll zoom in. Even during the consolidation, I'll just look at the 100 tick chart or the 1,000 tick chart, these smaller charts, and see if there is a descending wedge or ascending wedge. In this case, happened right here during the consolidation. The breakout should be down here, but you can identify this. It's basically consolidation happening here within the bigger one, right? Fractal pattern, just like zooming into a snowflake, right? Fractal pattern. Sure enough, breakout, perfect retest, even a decent looking double top, and there's your short. I've been looking at this recently. It's very interesting. This week, whatever few hours I've looked at the market, that's what I've been looking at. And here is another one, I believe. No, I don't think I saw anything here. Oh, here we go. Yeah. So let's go back to the 4-hour chart. I'll show you the trade that I got involved in yesterday. So I identified this area as a consolidation, right? And so that translates on the 100 tick chart. That's right here, this purple area. And so I was watching it inside of this purple area, just a great big mess. But at some point over here, I identified it an ascending wedge. It just caught my eye. I'm like, all right, I see there's resistance area right about there. I see the higher lows. I saw the breakout happen and it went quickly. As in, look, it didn't just hang around above the breakout area like right here. It actually went and it created some distance. Look at that. Breakout, and it goes. It didn't just hang out above the key breakout area, the key breakout line, this previous resistance. It went quickly. That's momentum. That's a breakout situation. Breakouts are all momentum situations, right? You can see the green volume right here. Buyers came aggressive and go. And then it came back to retest. And this is the kind of retest I like because it created a gap between the breakout and the retest. You see this empty space here? I like that. Room to the left. Very simple. So ascending wedge inside of a massive, bigger picture consolidation, then the clean, neat breakout, not the choppy one, a neat one, then the retest. And this is where I got involved. Got longs somewhere here, stop right below it, something like that. You guys saw the screenshot. And the target was way, way above. Turns out in this case, it went, zoom it out, it went and it got to the overhead resistance here. I think it was in this area where I moved my stop to break even. And then it came and got me. Right? It didn't go to the target, but it got me out of break even. But anyways, the opportunity was massive. If it went to the target, which I believe was here, let's zoom back a bit. No, it was here, right there. So the entry down here with that stop, we saw it. And the target up here, I don't know, that's 20R maybe if it went that far. It went halfway, it went to like 10R. Most people at 10R would be happy to take it off. But it wasn't my target and I was out at break even. No big deal. So that's an interesting thing. So you see this bigger picture consolidation. This is from the 4-hour chart. Within that, on the smaller picture, this is the 100 tick chart. I'm identifying this ascending wedge and I took into this. No big deal. And no love lost, no money lost. It was just, I gave myself a massive opportunity and out at break even. This was great because I only risked about, I think, $250, $300 on this trade. And if it went, it would have been like 5,000, right? Just add a few zeros onto that and now it's $1 million a day. So not too difficult. And there's a good reason I'm not deploying that kind of cash right now, that kind of risk per trade. So I want to really nail down and refine this style of trading. And then I'll deploy $20,000 of risk on any one of these trades, no big deal. And then really gets big. It turns into a lot of fun. And over here, you can see this ascending wedge. You show the difference. I identified an ascending wedge here as well, but the breakout never happened. So obviously, retest never happened, and so it was no trade, nothing. If you zoom into it a little bit, again, I've said this before, and I'll say it again. This is why I don't like trading breakouts, because if you got involved, if you saw the price go above your white line here, above your resistance, you're thinking the breakout's coming, you can see all this volume coming in aggressively, see all these green bars all happening very quickly, get excited, hit the button, you enter, big position size, stop over here, and you're out. Unnecessarily stopped out. You can avoid these stop outs by simply not trading breakouts. Trade the retest. Over here, it never broke out, never retested, so you never touch it. I never touched it. Over here, zooming further back, over here, there you go. Breakout, a retest. Perfect, right? Not too complicated. So again, just something to explore. Looking at fractal patterns, nothing new, just another little tweak. Looking at fractal patterns, which is there's a consolidation and you're looking at a consolidation within the consolidation, and you can end up with trades like this. Pretty cool, I think. Let's see, what else did I see? I think I saw something on gold earlier this week. Let's see. Hardly took any trades the last couple of days. There was that one trade yesterday, which was break even, and that was it. No, I don't think I took anything on gold this week. Look at this area identified. You can see higher highs and lower lows at the same time. Don't touch it. I don't believe in trading this. I don't know where to put the stop at the bottom, where to put the resistance at the top. It's just, it's a mess. Don't play with it. Oh yeah, this consolidation on the 4-hour chart, look at this with the higher lows. It's basically an ascending wedge. Neat breakout, retest. I mean, this is a 4-hour chart on gold. Very clean, neat moves from this consolidation. So it either goes sideways or it goes directional and flip-flops, right? So after going sideways, then it goes directional. And here's a retest. And when it could have taken off at that resistance there. Pretty much hit that area, right? So there you go. Right now, it looks a little messy. You know what? This resistance there, consolidation area, I can put it that way. Just leave it like that. I believe silver had a good one. I think I took a trade on silver. Gosh, I don't know. Take the screenshots and then I forget about it. It's there. Oh yeah, silver. Look at this 4-hour chart on silver. I identified that resistance right there and the higher lows. Pretty straightforward, right? And so you have the ascending wedge on a 4-hour chart, not just a consolidation, but an ascending wedge. So that's pretty cool. And what's this? I think, yeah, tiny little consolidation here. You can identify that one too. Break, retest, go. You have that. But let's look at this one. This was 2 days ago, I believe. When this breakout happened, I think I did get a piece of this one. Yeah. Let's look at this. So again, ascending wedge on a 4-hour chart. That's when I'd like to zoom into the 100 or 1,000 tick chart and see what we have. There it is. So once it got up to that resistance, we identified on the 4-hour chart. There it is. Identified the ascending wedge where the top is decently flat, higher lows, and here we go again. Same thing. Breakout, and it goes. It didn't just hang around in the breakout zone. It actually went and came back later, creating this gap, this empty space, room to the left. That's what I like to call it. So when you're looking at it here, when it comes back to retest, there is room to the left. And once it does that retest, off it goes again. That's where I like to catch it. I believe this is the one I caught the other day. It went. Or was it another one? I think it was this one here that I caught. Yeah. I don't remember. Anyways, it was a few days ago. So this is what I believe. Very simple stuff, right? Not too much. And yeah, that's how I'm seeing these things. Anyways, what else we got here? Tony clickbait. Yeah, clickbait. There you go. You know what's really funny? Before I got into trading full time, like before 2017, I spent, I think, about 3 years as an internet marketing consultant. You believe that? I used to run basically Facebook and Google ads. I was good at it too. People would pay me to run their ad campaigns, develop the ads and all that stuff. But I didn't like the work. It just felt wrong. So yes, I know all about clickbait and running ads and social media marketing, internet marketing, running newsletters, websites, everything. But it doesn't make sense. It doesn't align with the way I see the world. Trading does. I don't have to sell anything to anyone. I just trade and make money. Shit, man, what else? Right? That's easy. Much easier. Well, you got your Hamza. Struggled last few days with MES. One Direction. Saw your trade on MES breakout retest on Monday. Learn to go with. You're trying to learn this. Okay. Yeah. So, as you were saying, Hamza, in your view, the MES has been directional, ripping in one direction. All right, let's look at it. What do we have? Yeah, pretty much one directional so far these last few days. And you've been struggling with it. Well, here's the fun part. If it's going, right, like over here, it's going, and you happen to turn on your computer and look at it, it looks like this. It's up here. It's got these few small candles, had a big candle, and now it's up here in the middle someplace. And you open up your chart and you see, like, oh, it's going. Is this the place to enter? I think so. This is not where I like to enter. This is chasing. Wait for it to slow down. Wait for it to get to the next train station. And that happens to be right here. It goes, and then it relaxes. This is where you start paying attention, right? The consolidation. Then when it breaks out, then when you get the retest is where you can enter. I mean, this is just a 4-hour chart. Personally, I'll zoom into this on the 100 or 1,000 tick chart, identify the ascending wedge, even inside of the consolidation. Try to find those entries and go with it. So again, here you can see, then it went, and then it went sideways. It went directional and then sideways. So once it's sideways, that's where you're paying attention. You're not paying attention when it's directional. You're just not. I'm not. That's how you lose money. That's how you get caught up in all this nonsense. Don't do that. Wait for it to go. Let it then relax, like it is now. And then you might find an opportunity. So let's look at it. Where are we? We are Does the market open? 40 minutes, 45 minutes from now. It's too close to the market open for me to get into a trade. But anyways, let's look at it. So it's in this consolidation now. Let's look at this 100 tick chart and see if it's giving us any opportunities, any setups. That's where it is right now. And the setup I'm looking for is ideally an ascending wedge or otherwise a descending wedge. And I don't see anything here. Can identify a bit of a flat top here, but not really. Nothing. You're getting higher lows here, fine. But I need a flat top with higher lows. And then I'd be interested. For now, nothing. Maybe it'll break and retest, but give us a flat top before it does all that later. I don't know. For me, there's nothing in here right now. Let's look further back. So yeah, that's when it came from down to up. And this is the area that identified the support, identified the resistance. I don't see anything in this. Not the way I like to trade, just nothing. There's just nothing here. So wait for it, wait for it. Wait for the setup to come together. Look at it an hour later, maybe. No big deal. Oh, you got disconnected. Funny. You want ES again? Oh, sure. So what I was saying here is, it's either going directional or it's consolidating, right? And you can see most recently, these couple of candles, basically during the New York session yesterday, was all directional. And now it's just been sideways, 4-hour chart sideways. So you want to wait for it to start going directional again, up or down, either way. Ideally up, because it just continues its trend. But then to get into it, just waiting for a break and retest. But what I like to do is when I'm identifying the consolidation, then I'll zoom into the smaller picture, which for me is a tick chart, either a 1,000 or a 100 tick. We can look at the 100 tick now. The market's slow enough. And I'm looking for a wedge, an ascending wedge or descending wedge. And if you look at it right now, I don't see it. I see higher lows. I don't see a flat top. I don't see it here. I don't see it anywhere. So once I identify that triangle, then I'll be interested. And after that triangle is there, I want to see it break out, have a good momentum breakout, go some distance, and then create room for that retest to happen. Then I'll take the entry. And all that, of course, with the footprint chart confirmations. So right now, absolutely nothing. I don't see anything. I don't see anything in this entire consolidation that I would touch. I haven't taken a trade today at all. I only looked at the market a little bit earlier today, a few hours ago, and that's it. I haven't looked at it. But yeah, that's how I'm seeing it. Let's look at MQ. So we failed to take those in the last 2 days. Give a breakout, retest every day. Yeah, wait for it. It's okay. If you miss it, no big deal. The market's still here. But if you start chasing it, you blow up an account, then you won't be here while the market's still here. Now you got a real problem. Don't do that. Take it easy. It's okay if you miss it. I mean, I miss so many trades. I don't look at the market for 23 hours. You know how many situations go? I mean, I didn't catch any of this yesterday. This whole thing just went. I got stopped out at break even on an oil position. Didn't catch any of this. This whole week I didn't catch. I don't know. Maybe got 2 things on Monday, I think. And that was it. No big deal. I'm not going to sit here looking at it. There's still life to be lived outside of trading, So I identified this as a big consolidation. What just happened now? Looks like it popped down. Let's have a look. Let's zoom into this one. This is the MNQ. And look at it on the 100 tick chart. Zoom out a bit. So that was a big consolidation. It went down, came back up. Great big choppy mess at the moment. Again, I don't see a wedge anywhere here. Do you? Let me know if you see a flat top with higher lows or lower highs. Basically a triangle with one side of it being horizontal. I don't see anything. Wait for it. Wait for it. Maybe it gets up to the top there, puts in that ascending wedge, and off you go. Maybe that. Could happen in the next 10 minutes. Could happen in the next 10 hours. I have no idea. Or to the downside, either way. See this thing, yeah, just did a breakdown. Oh yeah, this is a good example. Look at this. Let's say you identified this as support as it came down and bounced off. So if you identify that as support, and then it comes down and does a breakout, and you're all excited about a breakout, well, realize that a breakout is always a momentum situation, and really make sure you understand that a breakout is when the price breaks out from sideways action, right? Now, looking at this chart, zooming in, You want sideways action, and then you want it to break out and go some distance. It's got to have a momentum on its side. So you have a little bit of sideways activity here. I mean, it's not truly serious. Can't really take this seriously. It's not significant enough. And then it goes, but it didn't really go. I mean, look, it's right away. There's hardly any space here. It came right back into that resistance, previous support zone, turning it into resistance. Call that a retest if you like, but it's really shady. Because you want, first you want a consolidation, then the breakout, then the retest with a gap between the breakout and the retest. This is all over the place. That's why I wouldn't trust this price action. I see it like this, I don't touch it. And this could easily have gone and made a huge move. In this case, it did not. But just so I could keep my trading nice and tight and make sure I don't have I don't overtrade and I don't get into silly situations where the probabilities of success is low, I have these rules in place. I want to see consolidation leading to a breakout, which is a genuine breakout, which goes some distance. It's a momentum situation. Then comes back and gives room for that retest to happen. None of that happened here. Sure enough, it failed in this case. You can see there was no position to take anyway. And now it's even worse. There's nothing. There's absolutely nothing in this. So I'd wait on it. Wouldn't be so much. Cool. Well, 15 more minutes, guys, and I got to move. What else is on your minds? Anything you want to look at together? We got Jill coming on at 9:30 Eastern. We'll be with you through the open. I haven't taken a single trade today, and we'll find out in a few hours if there's going to be anything. Now, as we get into the New York Open, I'm not interested in putting on any risk. I'll look at it maybe an hour after the open, see if there is an opportunity, and leave it. Just let it be. Let's look at this. I think I found a couple of trades on the Russell earlier this week. Let's see if I can bring them out. Oh, here we go. Look at this one. Forgot about this. I'll show it to you. This is fun. This is the 4-hour chart, and you can see this massive sideways action, right? I just drew a triangle around it. When it broke down, it came back with an ascending wedge, so that's interesting. Not exactly the way I like to trade, but anyways, I just identified it, didn't trade it. But over here is where it got interesting. Look at this. Did the breakout of this 4-hour massive consolidation, and then it started to go sideways here. So I identified the top, and I drew this. And this is interesting. This is a bit of a cup and handle pattern, but it's not on this 4-hour chart. It was, I believe, on the 100-tick chart. Show you what I saw this was a few days ago already. Yeah, there it is. Interesting. You all know the cup and handle pattern? Very popular, especially among swing traders on daily charts, weekly charts. Very, very popular. Will O'Neill created this style of trading many years ago. He's got books on it. Good stuff. So anyways, the price goes directional, in this case bullish, and then it makes a rounding bottom. The pullback is a round bottom, and then it gets back up to its resistance, and it's supposed to go sideways. In this case, you can see it made a bottom there. And I'll just extend this out, and you can see there's a bottom. There's a bottom. So there's your cup, and there's the handle of the cup. This line up here is nothing more than the high, the resistance. So the price action looks something like this once you identify the pattern, right? You have this cup and the handle, and then the breakout of the previous resistance. And once the breakout happens, you want to wait for that retest. In this case, it did come in and retested the cup area. No, sorry, the handle area of the cup, not just the resistance. And there's your opportunity to get involved. I think I did get this one. I think I got involved here. The stop below and the target up there, and I got out of break even probably here. I don't remember. This was Monday, I think. Anyways, pretty straightforward. It's something I don't trade usually. I just happen to see it on this day. See it a lot on weekly charts more than anything else, but it's there. The problem I have with this particular pattern is it's very subjective. You can argue this is not really a rounded bottom. Well, fine, fair enough. So it's not a setup I use regularly. This one I just happened to pop out of the screen at me. So, and I saw the confirmation, so I did take the trade, and out of break even, sure enough. And of course, it went. How normal is that? Does that happen to you guys too, where you get in, it stops you out, then it goes 30R? Huh? Does that happen to anyone else in here, or just me? Happens to all of you. It happens to everybody. Oh man. All right, moving forward. On this one again, on a 4-hour time frame, I saw this consolidation, put it on, put these rectangles on, and here I identified this ascending wedge. Once again, the flat top and higher lows, but once again, The breakout didn't happen. The retest didn't happen. No trade. And once again here, same as we discussed like 15 minutes ago, if you were trying to catch that breakout, you would have seen the price go up above your resistance, putting in heavy volume, buyers coming in, get overexcited, put on a heavy size with a stop, and you stopped out unnecessarily. You're losing money because you're chasing breakouts. Don't. Let the breakout happen. If it is genuine, it'll create some distance from the consolidation and give it enough space for the retest. That's when you have these massive trades, man. These are the trades I'm taking these days, and they're massive. I mean, 10R is the average. You know, it's really cool. And then when you put on something that's 15, 20R and it goes 10R and stops at break even, well, this is where you got to find ways of not being frustrated. You know, I think I got frustrated on Tuesday. Put on like 4 of these, and they all went 10R and then stopped on the break even. You guys saw the screenshots, right? It was funny. The targets were all in the 20R range. Anyways, that's that. But hey, that's just how the market is. You know, you just gotta get used to it. Imagine putting on $20,000 risk. The thing goes $200,000 and you're out of break even. Like, seriously, I don't think I can handle that at the moment. That's why I'm not putting on that kind of size at the moment. So once I know I can do that, then I'll do it. No big deal. Just think about those numbers, man. You gotta really build yourself up to it. Anyways, here on the Russell right now, I don't see anything. Again, great big choppy mess. Nothing worth looking at. Nothing worthwhile. What do you got here? You got that false breakout many times in your early trading career. Decided not to take breakouts. There you go. Yeah. Again, going back to the internet marketing thing, a lot of these marketers will talk about breakouts because they're fun, they're exciting, they're fast, they turn you on. It's all excitement, you know. It's all the starting line. The flag goes down, the cars go. It's a buzz. It's a real buzz, and they'll gauge how much money is in your pocket and take it. They'll come up with ways to take it. I know I used to be an internet marketer. You know these things. You want to really trade? Get your head out of the internet. Start looking at real price action. Really get your head out of the internet. That's what matters. The high of day break. There you go. Look at that. You want to know? I'll tell you something funny. In the previous group where I used to trade with those guys, you guys know that group. So funny. You had guys come in there and talk about these consolidations and breakouts, particularly high day breaks. And they'll say, hey, yes, I got into it, and I'm out at break even, or I took a stop. Or look, I got 2R profit, and the rest out of break even. Great, successful day. I'm watching these guys. Okay, everyone's sharing screenshots and doing all this. So I'm watching this price action, the same thing they're watching. So I watch this breakout happen and watch all these guys get in, get out, all that. After the breakout happens, then the retest happens, maybe 5 minutes later. And then I jump in with the options stuff on something like NVIDIA or whatever. And then 30 minutes later, I share the screenshot. Look at that. It's about $70,000 right there. Boom, 5R. And it's just takes a little bit of patience. But you know, they're all overexcited, showing their screenshots, and you know, this is the way to do it. No, it's not trading. It's buzz. It's excitement. It's entertainment. What do you think it's called? Pre-market show, not pre-market prep. It's a show. I mean, there's so many. I mean, there's so many groups like this out there. You guys have all been around long enough to know this shit. Just pay attention to your risk management. Pay attention to where you can get big RVR. Pay attention to the company you keep. Everything else will just work itself out, mostly. Not such a big deal. All right, what else we got? A few more minutes, guys, while I'm here. Let me know what else you want to discuss, if anything. This is the Dow Jones. Identify this big consolidation area. Let's look at it. 4-hour chart, and there it is. Consolidating. It's been a mess, really. Yikes. I don't know what to think of this. It's just messy. Looks like there was some news out. Really messy stuff. Forget about it. Oil, I think we just looked at it. Yeah. Still inside of this big consolidation area. I don't see a setup. Anyways, I'm not taking any positions now for at least another hour and a half. An hour and a half later, I'll take a look. This is gold in the middle of nowhere. Okay, all sideways. Silver we just looked at. Crypto. We have a few crypto traders in here, right? You guys love crypto. What happened here? Gosh, let's take a look at this. I think I was looking at this earlier this week. All right, 4-hour chart, and I put in this big rectangle that just looks like sideways action to my eyes. And then I got up here. What did I do here? Oh, I identified some consolidation down here. Got an ascending wedge there. That doesn't look right. But let's look at the smaller picture. That doesn't look right at all. Oh, it does actually. And now it looks right. If you look at it this way, you're getting a flat top and higher lows, so ascending wedge. Breakout failed to retest. And we're right back into the wedge. So yeah, no trade. I mean, this is tricky. Crypto is tricky anyways, but you can see the setup was almost there, right? The breakout happened, went some distance, momentum situation, but failed to bounce off that previous resistance. And it's sure enough, now it's a great big mess. You want to play with this. Oh, there you go. That's what I see. What we got here? Hamza, you've been short and long on oil today already. All right. Cool, man. Please do share with us what you've done. And once you've ripped the heart out of that oil market, you start buying up oil fields in Saudi Arabia, please do share the profits with us. We're all here together, right? We should all do that. But yeah, Tony, you'd like to upload the session later on. Yeah, for sure. All these recordings get uploaded. I just got to be on a better schedule of getting them out there. It's been tricky recently again, like you guys know, with all the war stuff around here and the kids home. I'm with them full time and just like dump them on their grandparents. So 24 hours a day I'm with them. That's why it's been tricky. But schools begin next week on Monday. Everything should be back to normal, schedules and all that, the regular classes. That frees up a lot more of my time. That means I get to hang out more with you guys, be online more, have more fun, take more trades. Oof, not necessarily a good thing. Yeah, all that fun stuff. Cool. All right, let's get this one done and get this recording out there.